Hi guys, this is Dan with Index Option Trade, and today is May the 19th, 5:30 p.m. Here. Senators reject effort to end debate on bank bill. This is from Market Watch. And Washington senators, they had a 57 to 42 vote, and the measure didn't go through the Senate floor. So this is what is brewing behind the scenes on about Wall Street, and this is a comprehensive reform bill that would limit Wall Street doing many things that it has done in the past and the crisis that it created in 2008. It is a banking reform bill produced by Senator Dodd, and it is also very helpful for the consumers. Let's go try to. I'm trying to get to another site here, but I can't. Let's take a look at the financial fix. Two demos here. Um, Defeat Senate Wall Street cloture vote on Wall Street. Two Democrats voted against the debate on Wall Street and the Senate today and defeating the motion for closure, and that was being cleared the way for a final vote before the weekend, capping off a day of stubborn opposition. So you could read all of this, but you would not see this thing here. This is about the financial fix on Huffington Post, very reputable company, and now we're going to go and concentrate. So this is what is happening. That is what's going on behind the scenes that you don't see. And the Wall Street knows about this. They know that the news is getting tighter and tighter every day. And the axe is going to fall. And that is creating a certain amount of uh, panic and anxiety and frustration and anger and all these dark clouds that I will show you where they show up. And this is where this is showing up in these charts, that what you have seen that is happening behind the scenes in the Wall Street reform bill. And the charts are reflecting that accurately. Today there was another horrific sell-off and the market went down to 200-day moving average at 1100. Touched that briefly and then it reverts. I was just expecting that they can push it down and crap this 1100 barrier. This is a very solid barrier here. 1100 is like a retaining wall, and if that is broken, hell will break loose. And that retaining wall was about to be taken out, but it went there, nudged it, touched very gently, and the market just started revamping back here in a very slow move, not a very passive move, but very slowly. And you have a doji close or hanging man, but these hanging men mean nothing here because this thing just means one thing: more selling to come. It's all red here, but let's take a look at what it is doing. The market has been doing here. This is the McKellen oscillator on a 2 SPX chart, and anytime it has gone below these readings here in the past, here, here in March last year, and anywhere, there has been a very significant reversal because these are extremely oversold readings of the McKellen oscillator of the market, minus 300, almost 325. And when that happens, it has just happened last Thursday, 2 weeks ago, almost May 6th, and the that's where basically the bounce comes, and it's a technical bounce. It's a bounce for technical reasons. When the market gets this oversold and bounces off its 200-day moving average, so they expect some kind of a snapback here, but that snapback does not mean that we're out of the woods. It's just going to go up to here, touch this trend line at the most, and then the shorts will start selling the market off again. Because what happens here when they sell this market so horrifically, there's nothing left to sell. People who had given up have given up and they're out. But then what happens here when this snaps back, those people pile back in and the buyers just accumulate shares and it goes up here. Then it's easy to slay the dragon one more time. And so they take turns in slaying, and it's called short the bounces. They're going to bounce it. There's a bounce in the market, and they're going to short it like hell. Now, all of this damage here to the charts is not what is an organic disaster. This is a man-made artificial disaster. In other words, it means that Wall Street knows what they're doing. This is a controlled crash. It's not an uncontrollable crash here. This is very much in control, and they can always switch this flip back and push this market above here. But this is sheer frustration and anger and temper tantrums that we talked about so diligently so many times, and I have given you enough proof what is really happening. The Senate Banking Committee and the Senate is about to consider the biggest overhaul of the financial system since 1930s, and that is going to curb a lot of incomes and a lot of domains and a lot of things, and it is showing up right here. So if these things are happening, just be careful with it and not to run. Let the market snap back if it does, and then we'll take our positions again and see how it goes. Once this financial regulatory reform is out of the way, the market will come back probably and behave nicely. Remember, they never kill their golden goose. It always comes back.